Hi, this is the first of 3 videos on Introduction to Finance. My name is Brian Mills and I hope to just take you through a couple of basic things so that you feel a bit more comfortable about starting your business and making sure that you stay solvent. The first one we can think about is what we call sales or revenue. This is the total money that your business brings in. This is actually what people pay you. The big problem with this is these numbers can often be quite large, very impressive, and make us feel very confident about our business. The first thing we've got to remember though is as soon as we've got that money in, a big chunk of it goes straight back out again in terms of what we call costs of sales. So let's just say we've bought something for £5 and we've sold it for £10. Immediately the £10 revenue is reduced to £5 worth of, well, we should call it surplus for a moment, £5 worth of surplus. So can chop that in half and lose half of it straight away. That was our cost of sales. Now in a service business that might be quite small because actually you're not paying for much material, but the principle remains the same. There's often something that you have to pay just to make that sale take place. So we'll call that cost of sales and we'll leave that to one side. That's left behind half of our money, which kind of looks like profit, but this is the worrying thing. It's not profit. It's not profit yet by a long, long chunk. One of the first things we always suggest to people is it's good at this point just to think to yourself, 25% of that, that's not mine anyway. 25% of that I'm putting to one side to pay for the tax bill at the end of the year, to pay for the accountants. With a good accountant it won't be that much that you have to pay. At the same time though, you need to put that money aside, because unlike being employed, with being self-employed, you're responsible for paying the tax bill at the end of the year, and so you need to make sure you put some money aside. So let's lose another 25% to tax. We'll just put that to one side. So that's 25% of our £5 profit gone. What we've got left, the 75% bit, has to pay for everything else. So we're not doing too bad. We've managed to lose £5 straight away, paying for the cost of the materials, and now we've lost another 25% of the £5 that's left, another £1.25. So we're down to about £3.75 of what we might think of as profit. What I want to do in the next video is going to come back and we're going to look at, unfortunately, why that £3.75 isn't actually profit. There's more money to be taken out of that. So, just to recap, sales or revenue is the money that the customers give us. The actual cost of making that sale in terms of raw materials, perhaps if it's a cafe it would be the food for example, is what we call cost of sales. And the money that we have left over isn't yet profit. We need to remember we need to take 25% of that and put it to one side in a savings account, ready to pay for the tax bill at the end of the year and pay for the accountant. Of the remaining £3.75, in the next video I'm going to show you how we need to spend some of that as well before we can start calling this a profit. Thank you.